Welcome. So now we're going to get into the details of how we save our clients $25,000 or more. Now in these, I'm not going to be covering everything, but I will be covering enough that you're going to be able to get a really good idea. So we're going to first go over understanding the costs. As I stated, there are two different ways you can save money. There's going to be tangible ones and then intangible, which is the value that your agent's actually going to bring in. Now, the tangible ones are the ones that are dollars and cents. So you're actually going to be able to feel those and see those. You can associate dollars. You can quickly visualize those versus the tangible ones, intangible ones, I mean. So the intangible ones are the value that your listing or buyer agent is going to bring into the contract. So things like experience. Right? You don't quite understand how experience is going to really add value until you realize that there's a disaster happening and you really need somebody to be able to expertly handle it. Leading edge technology is another one. Now, in today's age, you want to be able to market your home much more than just putting it on the MLS. Effective marketing is another one. Having a solid network. So this is where agents who have networks not only with other agents, which are very critical, but with other lenders and vendors and other support like settlement companies, anybody that's really supporting the transaction. So let's dive in. I'm going to start with the buyers. So as you can see, here I have a whole bunch of these, and we may not go through all of them, but I'm going to touch up on most of these that we have allocated just for this video. Now, the first thing is your biggest cost is really going to be your mortgage, right? Understanding how much that's going to cost you. And people don't realize, but there are 3 to 5% grants, and these are monies that you don't have to pay back. And a lot of people say, oh, not where I'm looking, not with the income that I'm making, there's no way, but look at it. This is why we keep up with what's happening. Let me give you an example, and this is right now. It may not be by the time you watch this, but there is a $10,000 home owner grant, home purchase grant at Loudoun County for anybody that's working for Loudoun County. There are 3 to 5 grants for either down payment or closing costs. This is money that you don't have to pay back. How exciting is that? If you've been holding back because you don't have enough money, maybe you have enough money for closing costs but not for down payment, or vice versa, you may have a chance to actually get a grant. Then the lenders. So obviously each lender offers a unique offering. And the main thing is really understanding the terms and budget. Now, my brother just recently bought his house, and he was so excited. He called me up and he said, oh, I got a great rate. I did this online qualification, and I got this unbelievable rate. I said, okay, let's go through this. And when I pulled up, actually, let me pull it up for you so you can see it as well. So I'm going to pull a different one. This is not the one that I showed him exactly because the prices are different. But this is going to give you an idea. A lot of times people don't realize there's a monthly budget that they want to stick to, but they're so focused on the price or what they qualify for that they totally forget what their monthly budget should be. When I first moved here, I knew that I had to stick to a specific budget. So from there, I could decide on what kind of financing and what kind of options I could afford. So here, a lot of people say, oh my God, I've got a great interest rate, right? So let's look at the interest rates here. So here's one where we have 3.75%. There's another one for 4.125, another one for 4.125, and another one at 4.5. So logically, people are thinking, if my interest rate is low, then my monthly payment is going to be low. But what you don't realize is there's just so many different things that go in. And I'm not a lender, and I'm not claiming to be a lender. I'm just demonstrating the fact that you really need to spend some time and understand it, because these could really be potentially thousands and thousands of dollars. We just did one for a client of ours where we saved them a quarter point on a $745,000 loan. And that's about $35,000 right there. So let's look at it. Here's an FHA, $400,000. So we're just basing it on $400,000 loan. Down payment is 3.5% because you can get a loan at 3.5%. Yes, if you think you have to have 20%, no, you don't. There are programs, I think there are even ones that are 3% now, but 3.5%, 5%, you can put 10%, and there are different ways to slice and dice it if you don't have 20% down. All right, so these are just some numbers that we threw in there. So the mortgage amount you can see here after the down payment is taken out, and the MI factor. Now, a lot of people don't realize that there's going to be a mortgage insurance or mortgage premium. So there's going to be some cost added. So if you're not putting 20% down, there's usually some kind of a cost because that's how the lenders mitigate their risk. And again, I don't want to get into a whole lending or finance thing, but I just wanted to demonstrate to you guys because I know it's really important, especially if you're a first-time home buyer. You really need to understand. And when I sit down with the clients and we go over rent versus buy, or pull up charts like this to really understand, maybe they went to two different lenders and got two different mortgage rates and they don't quite understand the points and how does that work? How does the MI work? What is PMI? So we can sit down and go through that. And so you can see here the cash to close, how much cash you're bringing in. Obviously, if you're only putting 3.5% down, it's going to be different. But look at the total monthly payment. And this is what I showed my brother. What my brother didn't realize is when you get qualified online, they add points. There are other costs that you don't really see. So you really need to get a breakdown of all the costs that are involved. Just so you can compare apples to apples. So here you can see with even the 4.5%. So just think about that, 4.5%. Now that's a conventional LPMI stands for lender paid MI. Okay, so they actually lump it in. That's why you're paying a higher interest. But that higher interest is tax deductible. So that's another thing. During our rent versus buy, we actually go through that because I can tell you, I went through financial planners that couldn't explain it to me. What is my actual tax benefit when I rent versus buying? So just so that I could understand. So over the years, and it wasn't until I actually became a realtor that I went through and realized how I need to explain it to people. But so if you're interested in that, you can actually watch it. But here, just take a look at it. So even with the 4.5%, look at your monthly payment. Your monthly payment is $23.44 versus if you're doing a 3.5% or 5%. So this is a real eye-opener for some people, and I really like to show it to people. And we have our own calculator where we give it to our clients, where you can actually budget your monthly budget, because I know how important it is for some people to really be on a budget. So let's go back. Understanding terms in your budget. So that we just talked about those things. Special programs. So let's look at those. Now, there are lots of special programs, and unlike some agents where they funnel you to just one specific lender, we actually network with a whole bunch of lenders because we know that each lender offers a unique program, and each lender, because they're competing against each other as well. So each lender can offer great opportunities, and sometimes those opportunities come at different times. So there are things like 100% financing options. There are doctors programs. So those of you who are new doctors and think you can't buy a home because you have hundreds of thousands of dollars of student loans, contact us. There are loans for entrepreneurs or people who are on commission. New construction. So if you're going to build your dream home. Foreign national programs. So if you don't have your social security number here, no credit. Divorce programs. There are veterans, obviously, the VA loans, that's 100%. Seller financing opportunities. So people don't even realize that there are opportunities like this out there. And we're constantly working for finding out these kinds of programs so that we're proactive with our clients. And there are also reverse mortgages. So let's look at what else. So we just looked at basically the financing options, and those could be significant. Just think over 30 years what a 1/4% or a 0.5% could mean to you. And again, there are ways to negotiate. So the main thing is negotiating on price, right? So that's obviously going to depend on how much you're going to save, is going to depend on how much we can negotiate down. But it also depends on the market and the home. So if there's low inventory and a lot of buyers out there and there's high demand, obviously that may be a little limited. But if you're buying at a specific time where there's negotiations taking place, or if it's a buyer or seller's market, obviously those are going to be different. So let's look at closing cost negotiations. A lot of people think that they can't negotiate closing costs, and that actually comes with strategy. Obviously, it's going to depend on the property. It's obviously going to depend on the seasonality and then what the market is doing and the supply and demand. But those are significant. Those could be significant. And I'm going to give you an example of that. Actually, let me do that now. All right, here's our example. This is one of my favorites that we did recently. So this is a condo in McLean. Okay, the price was $239,000 originally, and it got dropped down $10,000, and the negotiated price was $225,000. So we were able to save them $4,000 right there. And then we negotiated subsidy, which is closing costs. And guess what? We were able to get them a 3% home buyer grant. So that was another $67.50. Now the total savings on a $229,000 home is $13,450.50. So approximately 6% savings. Now this was great. Obviously, we were very happy for them. This was a condo in McLean, and they were first-time home buyers, and we were able to get them the 3% grant, and they closed on time. And we negotiated closing costs. We saved them on the listing price. So this was a pretty good one. And this is just a sample. I wanted to pull something out that you guys can actually see. And closing costs can be up to 3%. It could be in the hundreds. It could be thousands of dollars. Now, the next big thing is inspections. Now, most buyers aren't aware that there are a ton of inspections that can happen depending on the type of home that you're buying. And here in Northern Virginia, there are lots of different types of homes. So you may have homes with well, you may have homes with septic, you may have homes with well and septic. Obviously, radon, if you don't know anything about radon, radon inspection is big. Home inspection is the number one. We suggest everybody get a home inspection. It's not required, but it's basically an inspector that walks through the entire house and tells you what needs fixing and when, and if there's anything wrong, he writes a nice outline report, and you can actually take that report and negotiate with the seller, because what you want to do is make sure you're moving into a safe home for you and your family. Then there's pest and termite. So obviously with some mortgages, these are required so that you don't move into a home and find out that it's actually structurally falling apart because you have termites. Radon, well, we just talked about that. Septic, lead, mold, and structural inspection. And these can actually be in thousands of dollars. We had one with mold at our office where they were talking about just to remediate was $15,000. So again, all of those can really add up, and you just want to make sure that you're going to be moving into a safe home. So there is some more, and I can't really quantify all of these for you guys, but I just want to give you an idea of the different places where we're able to save our clients money. HOA and condo associations. So if you don't know, the HOA and the condo will come in and do an inspection, and you're going to get documents. So it's a reseller package. So when a new buyer purchases the property, you're actually going to get documents to make sure that you understand all the rules and regulations that come with either the HOA, which is homeowners association, or the condo association. And at that time, you can terminate the contract if you want. You have up to 3 days to review that information. Now, sometimes if you don't know how to really read it, like for example, Reston Association has a nice big 3-ring binder that you get. And if you're a first-time home buyer or you've never really looked at HOA documents, you have no idea how to read them, you need to make sure that there is no costly projects that's coming down the pipeline. This is where an experienced agent will be able to guide you through this kind of stuff. They'll be able to quickly look, let you know, or call the HOA and ask those questions. Because let's say you bought a condo and they just found out that they need extra money to renovate the balconies or to replace all the windows. Now you're going to have to pay thousands of dollars or maybe hundreds of dollars extra, but it's still something that will impact your budget. The negotiating of the violations. So when you get the document or the inspections from them, if you have opened up walls that you weren't supposed to, or if you have installed a deck, or let's say that you have a triple deck out there, a huge deck, but it was never approved, or maybe the color of it wasn't approved. Now you have to fix it. So all of those violations will obviously have to be negotiated. Then there are appraisal issues, right? Negotiating or lowering the price. So appraisal is when the bank sends somebody out to value the property so that they know how much they want to lend out on that property. And it's bank's opinion, or actually the appraiser's opinion, but the bank accepts it as an opinion of the value of the home. So if it doesn't appraise, so let's say that you have a $500,000 home and it appraises at $480,000. Now there's a $20,000 gap. Now what happens? Does the seller reduce the price or terminate the contract? You can walk away from the contract. So what happens? Because the bank won't loan above that price. So again, negotiations takes place there. And some agents don't even know this, but certain appraisals actually stay with the property. So it's all part of that negotiation of helping the seller understand as well. And then settlement costs. So there are different ways that you can actually save money there as well, such as asking to see if you can use or take the old survey instead of ordering a new one. And then negotiating deals. Now, I won't spill too much of that, but there's also some other deals that we can negotiate there. And then there's additional discounts. So there are moving discounts, and then we have some additional discounts as well as, places like Home Depot, etc. So you want to be moving into your new place and make sure that you're going to be able to at least save additional money somewhere. And then, of course, the network. Now, network is really important because you want to be able to find an agent that's networking with other agents so that they know if the properties are coming on the market, or if you have specific questions about a specific neighborhood or some kind of event that's happened. So whatever that is, we really value other agents and the relationship that we have with them because we have to deal with them on the other end. The network of lenders. Like I said, we like to network with different lenders to understand what they're offering so that we can bring the best offers and the best opportunities for our clients. So we don't want to do that. We want to really understand our clients first and understand what their needs are and what's the best path for them. And then lay out those options for you, because we don't make those determinations for you. You are the ones who are going to be making it. But knowing what your options are and knowing that you have different paths and understanding the impact of it and how is that going to impact your budget, how is that going to impact your settlement, how is that going to impact your future. Those are all really important. So those are networks. So that is my buyers for this video. And on the next video, I'm going to be covering the sellers. So I hope you join me then. And if I missed anything, or if you want to find out a little bit more information about any of these items, please give us a call. And like I said, we are a great team of agents here. We're all experienced and we all focus on areas that we're really good at. So I welcome any questions, and you can also leave any comments. And I really appreciate it. See you at the other video.